Good morning, traders. It is 8:01 a.m. Chicago time on Tuesday, the 20th of January, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. First, the graphic on the screen doesn't look right, but let's start out with the overnight view. General view is equity markets open slightly higher following Monday's gains, with Thursday's ECB meeting in focus. That's a key element here. DAX trades at another record high ahead of the ZOO data, helped by lower prices. The ZOO data was helped by lower prices, oil prices, and a lower euro. A little more confidence there. Lower copper and oil prices weigh on resource-related firms. The German ZOO current situation survey registers its third highest month of improvement, highest since February 2014, 22.4 versus 13.0 estimated. The S&P fair value is at negative 6.5. Johnson & Johnson reports 1.27, $1.27 versus $1.25 low. They show lower revenues by about 200 million. And then finally, the Turkish Central Bank cuts repurchase rates by 50 basis points. And if you recall, yesterday I posted, if you were around, yesterday I posted that Denmark lowered its interest rates as well. So what you have here is, as I pointed out in the past, a currency war that's going on between central banks and among several sovereign nations. Looking ahead, at 9 o'clock, we have January NAHB Housing Market Index expecting 58. At 10:30, we'll have the Treasury to sell 24 billion in 3- and 6-month bills. And then other than that, the Bank of Japan's monetary policy decision comes out later this evening. Want to keep an eye on that if you trade that pair. Any pair with the Japanese yen. Just a quick review of what's ahead today, this week. Wednesday, UK ILO employment figures. The BOE minutes come out. Bank of England minutes come out. In the US, we have housing starts, and in the Bank of Canada rate decision as well tomorrow. Thursday's a big day. This is a lot of pressure here on the ECB to do something on Thursday. At 6:45 Central, expecting the ECB rate decision, and then the Draghi conference at 7:30 Central. Following that, we have U.S. jobless claims, U.S. crude oil inventory. It's shifted to Thursday because of the holiday yesterday. And then that evening at about 7:30, 7:45 p.m., we get Japan's manufacturing PMI, and then China's HSBC manufacturing PMI as well. On Friday, we have a Eurozone manufacturing PMI, US manufacturing PMI, and leading index. That's what's expected for Friday. So that's the outlook for today and for the week real quick. Let's shift gears and look at where we are technically. Okay, so this is my composite chart. Each bar represents 1 day RTH only, meaning regular trading hours. And you can see that the market's been very orderly. Little gap up here from October 31st with a couple of days of balance. Having a POC at 68.50, we gap up, we pull back, fill the top of the gap zone here. We actually miss it by about 4 ticks, and then we start to move up higher to put in all-time highs, 2047. A little pullback to the point of control of this entire cycle, then we gap up again, and then we're in this balance all throughout December. New all-time highs at 2072. Then we have the small correction, rotation down, brings us back down to this point of control from the 28th through the 30th. And then the market gaps up again and then makes new all-time highs at 2088.75. Sorry, news feed's really loud. 2088.75. This particular high is a weak high. No consensus on this profile. On the upper end, you can see that the profile suddenly gets cut off. It's almost like it's at the top of the screen and is being cut off. And to me, that constitutes a perfectly, it's a perfect demonstration of a weak high up there. Be a lot of volume traded at the high, double top, and the expectation is that we will eventually make new all-time highs by taking this out. Once we did this double top, we rotated down pretty strong, back down to the point of control of the 12th through the 17th, bounce back up another gap, push back to the point of control of 2060, which was left behind at the beginning of December, late November. 2060 is a key figure in this area. It's the last consensus price before new all-time highs. This is the area that buyers have to take and hold in order to gain energy to take out the 2088. And that was that's what we're looking for on this day. It stopped short of it about 6 ticks on the 8th, and then it opened right at it on the 9th, tested up to 61 by 4 ticks, and then it sold off that day in a bearish engulfing pattern, closed the gap zone, and then we pushed this low by a few ticks. And then since then, we've been stuck at the lower range. This looked like we had another leg down. To me, once we saw this, it looked like this is shaping up to be a simple extension that's brewing. But right now we're trading at 2018.75. We've put in an overnight high, I believe, at 2650 yesterday. You'll notice that I don't have any data from yesterday because it's a holiday. I've deleted that data. Don't need it. Don't want it. Yesterday the high was at 2350. So we're going to open up in a gap, and we've got a lot to look at above us. So if we, oh, by the way, Friday, very odd trade on Friday. If we look at how this this trade shaped up, we attempted to make a low. We've got a double bottom here with Wednesday. Again, another week low, and then we slowly drift up and put a big fat area in the middle of the profile, and then we break out on the close on Friday. Remember, holiday weekend, and a ton of volume goes off near the highs on Friday, shifting this this wide balance zone, shifting the point of control up. Very, very odd behavior here. I'm not sure what we should expect, but there was a lot of volume that went off here between 2012 and 2014, and it caused this shift in the point of control up into the upper range. So the expectation coming into yesterday's session was for higher highs, and we got those. Because Friday, essentially, this auction got cut short. This is an impulsive move up, so we expected a continuation move, which we got yesterday, not in the day session, though. So we'll see what happens today. Right now, on the overnight session, we've been pushing highs all along. If you look at the overnight, again, you will not see the volume or the trades from yesterday because I removed those. But if you look at what's happened here, we've opened the session back below Friday's close, and then we've basically walked it up, and have been pushing near highs all morning until just now, where we've rolled over and are back to mid and are approaching the high of Friday. To me, it's still pretty odd behavior. The market's trying very hard to push up, but here's what's above. What's above is that zone that we've talked about several times. So let's let's bring this in so we can see this. I like to use this chart because it shows me where the real volume is in the area. Again, this starts on the 31st of October, the gap day up, and it shows us what has happened since. And it's just interesting how it's kind of a perfect demonstration of how the auction works, in that it moves from high volume to low volume to test to high volume. These last few days that we've traded over here, we've been stuck in this high volume node between 2014. Remember, 2014 was the over underline that I've been using. It's the CLVN, MCLVN, all the way down through to this low volume node, which lo and behold is at 81.25. This low volume node here is at 81.25 right there. And that's basically where we hit Friday twice. So what we've done here over the last few days is to test, to come down from this low volume node, and then this day here goes to this low volume node, and we stop. Then the next day we open lower in the middle of the point of control, the high volume here, and we test up to the low volume node and push through by about 6 ticks, and then we rotate back down, test the other side, the low volume node down here, and we held it twice at 81.25 Wednesday and Friday, and then now we've pushed back up to the 2014 on Friday. Friday's high is 2014.25. Not a coincidence, not a surprise. And so if you're not seeing how this volume profile works, especially in the range that we've been trading, where the market's been kind of loose and running under its own devices, there's no longer any QE. People kind of know what the Fed is going to do. The question now is what the ECB is going to do. So the market under its own devices is auctioning almost perfectly. I know it sounds like I'm insinuating that you should be doing better if you're not with your trading. I'm not saying that. I'm just saying that this is pretty textbook the way it's been operating. And what we have today is we had an overnight session that pushed to where 2026.50 right into this next high volume node, and has come off and is pulling right back. So above us, there's a fair amount of overhead resistance that carries over from a while back. So I'm looking for today, the upper target for today is that 2028, 2026.50, 2028 area. 26.50 is what we hit on the overnight. That is the high volume node here, the high volume price. It's not the point of control in this area, but it is the most traded price in this zone. You can see it there with the little dots protruding out more than any other line. So this area here represents another acceptance area that the market's trying to get to. It stopped right at 26.50 on the nose, and then sellers have stepped in. So I'm actually out of time, but so this morning I'm looking for responsive selling back into the 13, a retest of that 14.25 13 area. That's what I'm looking for as a primary idea. If we find buyers in this area that would continue the work from Friday and continue to push, that I expect the rotation back up to take us up to 2028, and then to get tangled up in this high volume zone. If we don't rotate down and test, then be cautious getting short, because that would show that we gapped and then we could not fill the gap and we continued higher, at which point the 2028 would become the initial target, not the main target, and then I would look for an extended target above that, probably in the upper 30s as we push into this next area up. The low volume node in this area is 2031, but I still think that that's too close for an open drive. We're opening in a gap, but we are in a balance zone, and a large balance zone, so the probability of an open drive is elevated but not incredibly high. The alternative is we do get responsive selling, and we cannot hold this last push up, and we end up taking out this overnight low to fill in the overnight stat, and then we start to push back into the 2000, and then ultimately back down to the 1995 area, which is quite a bit away, but not that bad for a selling day, about 20 points. So those are the ideas, the key trade ideas that I'm looking at for today. Good luck as always. These trader bites are not intended for you to take as trading suggestions. This is simply a methodical, repetitive process of just coming up with a plan for the day, waiting for the market to confirm or tell us what it wants to do, tell us what alignment we should have with it, pull out the plan that fits, execute it, and let your trades do their thing without interference. And then over time, I'm hoping that you start to see what real trading is like, and that's what it is. We're just here coming up with a plan every day, following some simple rules, following risk rules, and then executing, and then letting the edge find its way out of all of our trades. Not one or two or three trades, but a lot of trades. Good luck, and I'll catch you tomorrow morning. Take care.